It's a game, it's a con. Most importantly, it's a fraud, but yet this is still the system that passes for a pricing scheme for gold and silver.
Hey friends, welcome back. I am so glad to have you all here because we have a very special guest. We haven't had him on for far too long. It's TF Metals Report's Turd Ferguson, otherwise known as Craig Henke. And of course, TF Metals is home of the TFMR podcast. Craig, how are you, sir?
Sean, it's just great to visit with you again. We've been like two ships passing in the night and just haven't found time to connect for a year or two. So it's great to get a chance to visit with you again.
Well, thanks for coming back on. And I should just tell folks, we just had the nicest 12-minute conversation, which, was sort of off the record because, we hadn't officially started the call. So let's officially start the call. And we can even revisit some of that because you and I are so like-minded in our thinking. And you asked me how the attack, the anti-ad attack by Google and YouTube was going. Have we seen any improvement? And I was telling you that it's really my belief at this point that it is an orchestrated, contrived attack by the corporatocracy, think Bilderberg Group level strategy to essentially kill YouTube channels by demonetizing them and taking away their revenue. I just think that the corporatocracy is terrified, Craig, of watching all these eyeballs leave terrestrial television and leave terrestrial news media and mainstream news media to go to alternative media to get their information. More people spend more time watching YouTube every day than watch traditional TV. And I think it had these people in a panic. So they first targeted PewDiePie, and now they're targeting everybody else. And I think it's a strategy set at very, very high levels.
No doubt about it. Attempting to control the message and to keep the masses in line with what the government and the bankers want them to think and do. I was very sad to hear about the attacks that you were under by YouTube and by their parent company, Google. And it just, people have to remember, everybody listening to you and I talk, the internet's not free. I mean, just because you can buy a computer and pay for internet access and then you can go from site to site to site, that doesn't mean that all of that content was just put on there for free, that there were no costs associated with putting that stuff up, with building a site, with managing a site, with the software involved and the servers involved and everything else. I was attacked at my site by some viruses at the same time as a couple of other precious metal sites were attacked in the spring of 2013. Not surprisingly, the major raid that really smashed things happened about 2 weeks later in the middle of April 2013. Maybe it's a coincidence, maybe it isn't, but it forced me to rethink my business plan. And at TF Metals Report, we have this subscription service now. It's not exorbitant. It's not like it's $100 a month. It's $12 a month. But people are willing to pay it because they think that there's value in the site. But again, the costs associated with a site, are high. It's not something that just happens for free. And so people have to be ready, willing, and able to support the efforts of not only what I do, but even more importantly, what you do, Sean, in presenting this, I guess we'll call it real message to the masses. And I just would encourage everybody that's listening to us here at SGT Report to support what you do. So that it stays alive.
Well, let me just jump in, though, and say that this was not the purpose of our call at all.
No.
And you know that, but I'm very gratified and very, very thankful of the more than 700 patrons who have stepped up to help support us over at my Patreon account, Patreon SGT Report, because YouTube is no longer a level playing field. And that's the problem. That's where, for those of us that have goodwill and really just want to speak truth, in your case, speak truth, in the case of so many YouTubers out there, just to provide a narrative opposite of corporate talking points, right? Or the State Department typical talking points, we're under attack and it's no longer a level playing field. There are many, many YouTube channels that are dying. And I think that was part of the goal, Craig. I think the goal of the corporatocracy was to change the YouTube landscape, to change what made it great, and to turn it into its beastly overlord image, right? They want to just make it a depository for mainstream media crap.
Right. And given the state of the United States, given the state of the world, the still reeling zombie global economy that broke in 2008 and will never recover. It's just being kept alive on the life support of free money. Given the military-industrial complex and the efforts being made by the war party to get the U.S. involved all over the world, controlling that message to them is more important than ever. And at the end of the day, that's why things like what happened to you are happening.
Yeah. Well, all right, guys. The real purpose of this call and my plan out of the gate was to talk about Econ 101, Silver Market Manipulation, this great article that Craig wrote back on April 3rd. But in our pre-call, we just had we had this warm vibe going. We hadn't spoken in so long, and you were just asking me about things, and so I really appreciate that. But I do want to talk about your article, which started like this. Some say that everything you need to know you learned in kindergarten. I suppose that's true to some extent. However, to fully understand the forces at play in Comex digital metal, it might be good to review some of the basic economics that are often taught in introductory econ classes at your local college or university. And then you go on to talk about the fact that price is discovered where supply meets demand in the real world, in the stock market. And of course, the stock market too is manipulated, but you cited Coca-Cola as an example. But we don't see that on the Comex, where there is endless digital supply to meet finite, although growing demand. And I really appreciated that article because we all need to be reminded of that. And I should just let folks know, I've been buying silver again just over the past 6 weeks because of news items like on March 3rd, Thomson Reuters and CME Group to step down from providing the London silver benchmark, which is the silver fix, guys, as you well know. And then on April 14th, Ronan Manley at Bullion Star wrote, "Death spiral for the LBMA gold and silver auctions," where there's nothing but problems over there still on the LBMA. There is big news happening behind the scenes, not the least of which is this well-known silver market manipulation. So what is the current status of things at the Comex and the LBMA? And then let's talk about your article.
Oh boy, Sean, there's a lot of things I could pick at there, no doubt about it. And not to make it sound like what I've written is some, masterpiece of brilliance or something, but there's a lot that we could talk just in the part that you read. Let's start though with that LBMA fix because that's relevant to today. We're speaking on April the 19th. If anybody that follows gold and silver has noticed, each of the last 2 days has been a massive raid on paper gold specifically, but silver has played along. And those raids have occurred about the exact same time. In fact, though, actually, if you go back, there was another raid at the exact same time last Thursday. So with the markets closed last Friday, we've now had massive raids on gold in 3 of the past 4 days on increasing volume in those raids too. Well, that's, obvious and overt in its own right. But then go back to what you were just mentioning. That article written by Ronan Manley was referring to a very odd situation in the London gold fix last Tuesday, the 11th, when there seemed, they tried to write it off as this malfunction and all these other things. And the fix came in about $12 below where gold was actually trading that day. And that's the price. What the London fix is, that's the price because gold trades 24 hours a day. If you're going to transact wholesale transactions around the world for gold or silver, you need an international reference point. You just can't say, well, we're going to pick this price because it was determined at 2 o'clock in the afternoon, or whatever. That's the purpose of the fix, to set that international reference point twice a day. Well, when the fix is that far off from where gold is really trading, that opens up a whole can of worms and problems for wholesalers, jewelers, suppliers, producers, everybody else, bullion banks, all along the line. And so ever since that problem occurred, last Tuesday, we've seen these major raids that have occurred, 3 of the last 4 trading days, and all of them have taken place in the 30-minute window right before the London PM fix.
Yeah.
So there's something bubbling below the surface here. That's what Ronan was trying to say.
Well, there's something rotten in the state of Denmark, and I'm going to let you continue, but I want to read this third paragraph from Ronan's article in which he says, although the gold and silver auctions are separately administrated, they both suffer from limited direct participation due to the LBMA only authorizing a handful of banks to take part. So only 7 banks are allowed to participate in the silver auction, while the gold auction is currently open to 14 entities, all of which are banks. Correct me if I'm wrong, Craig, but I don't know of another market on planet Earth that arrives at price by this sort of price fixing between banks.
Right. And it creates all sorts of problems, especially in the world that we live in now, where supply is finite and very tight at the wholesale level, but yet there is this infinite creation of the derivative contracts, and the derivative contracts trade on a daily basis, and they are, for some reason, trading in these derivative contracts, they are used for setting the physical price. I mean, trading of these contracts is no more related to physical gold and silver than trading in orange peels or sunflower seeds. I mean, it means nothing. There's no direct connection between the paper derivative and the physical the item itself. And so the system itself is inherently flawed, and these banks are scrambling, trying to flow metal to all these different holes where where metal is demanded, and trying to deal with the paper price, and the system is just a mess. And whether that will eventually lead to a new system is something we're all hoping for. But what I was trying to do, and this gets back to the article you cited with the Econ 101 article, what I was trying to do is just make people aware of the fraudulent nature of these paper markets, how utterly unfair they are for individual investors, traders, mining companies, whatever. But at their core, they're fraudulent, because these banks are offering to sell metal that they don't have, and speculators are buying with no intention to ever take delivery. Right. It becomes just kind of a game of chicken. And again, what that has to do with physical metal itself is nothing. And that's what we're trying to expose by writing things like what we wrote a couple weeks ago.
Well, and it's even worse than speculators on one side and criminal banks on the other side. I think from the UBS Deutsche Bank emails, we've seen that they play both sides of the trade, and they create a fake market between themselves to further manipulate the price to benefit themselves. It's to say it's criminal is to understate Hillary Clinton's crimes and to call her a petty thief. I mean, it's as criminal on an epic scale as can possibly be described. And I just had Rick Rule on the other day, and I asked him, are you surprised that silver and gold have been able to really maintain and fight for staying just above their 200-day moving averages despite all of this criminal paper being thrown at the market? And because I think it's surprising. And as we're having this conversation today, Craig, on April 19th, Wednesday, gold was slammed for a second day as someone panics and dumps $3 billion of notional gold ahead of the London fix. And Zero Hedge reports yesterday ahead of the London fix, gold was monkey-hammered lower on huge volume, only to rip back higher, which I think is important. Today have failed to keep the precious metals down. They went for it again with $3 billion notional pummeling in futures. Craig, again, is it not a bit surprising, given their endless supply of digital paper, that they can't pound the price down as low as they might want to?
Well, again, that's the problem that they're having, and it's essentially a game of chicken. Think of, if I can kind of go back and give you some history, everybody, at least a lot of folks probably listening to you and I, remember the days of 2010 and 11 when the price of both metals, but in particular silver, was soaring higher. Back then, there was this great demand for that silver derivative. There was great demand for physical silver, and price kept moving up. Open interest, the total amount of contracts trading on the Comex in silver, usually around 135 to maybe 145,000 contracts at 5,000 ounces per contract. Let's call it maybe, 700 million ounces of paper silver on the Comex versus 900 million ounces of annual supply. That in its own right is outrageous, but that's what it was back in 2011. Well, now we have in 2017, with price, down 60% from its highs, open interest just yesterday made a new all-time high of 228,000 contracts, representing 1.14 billion ounces of paper silver, or about 130% of global mining supply. What is taking place there? Again, I would just call it a financial game of chicken. JP Morgan, which now has a stockpile in their Comex vault of about 90 million ounces of silver. That's enough silver to deliver about 18,000 contracts if they were forced to. JP Morgan knows they can just simply issue more and more contracts to this increasing speculator demand, just waiting for the time that they can tip the market over. It runs out of steam. All those speculators run for the exits at once, and then JP Morgan's buy back all those shorts and retires the open interest back. It's a game they play that they can outlast the specs. Back in 2011, they couldn't outlast them. In that April 2011, if anybody's willing to look at the data, can go back and see that last 20% of the silver move from 38 to 48 was almost entirely on the back of commercial bank, read JP Morgan, short covering. They were getting squeezed. There was no JP Morgan vault at the time. There was no JP Morgan 90 million ounces of silver in the vault at the time. They were just naked short and they were getting squeezed. Well, in the time since, they were hastily approved for a Comex vault the following month, in June of 2011. They've since stockpiled 94 million ounces, 50 million of which they've stopped for delivery on the Comex in just the last 2 years. And now, again, they issue these contracts with impunity to the speculators, hoping to wait them out. But, if there ever is a short squeeze, well, they can just deliver out their silver that they've bought down at these low prices and not run the risk of an extinction level event that they had in 2011. It's a game, it's a con. Most importantly, it's a fraud. But yet this is still the system that passes for a pricing scheme for gold and silver.
All right. Well, so we know
that's a lot, isn't it?
It's a lot. Well, you know what, though? We know how fraudulent this entire system is from, back to front, from top to bottom. The entire system is corrupt, and that's not just in the United States. Although at least in China, we see the SGE, which is attempting to be a physical exchange, and we're told that really the only physical exchange left in the West is at the LBMA, where again on March 3rd we have news of Thomson Reuters and CME Group stepping down from providing the London silver benchmark. What do you think that means? What is going on behind the scenes over there? I mean, where there's smoke, there's fire. Is that vault just completely engulfed in flames?
That's like one way to put it. Yeah, I think they're living hand to mouth. They're living, let's put it in, I guess, a different term that maybe people are familiar with. Think of the LBMA in particular. London is still the center of gold, physical gold trading, physical gold delivery, okay? Prices determined around the globe through electronic derivative trading, but, the vast majority of physical trading still moves through London. London is now existing on a just-in-time inventory system, if you will. It's kind of like your grocery store. You can go and, everything gets rotated, last in, first out kind of thing, and the stocks are always replenished. But if there's ever a storm, if there's ever a supply disruption, the shelves get emptied. If there's a blizzard coming or, a hurricane. The banks, the bullion banks that operate in London are basically functioning the same way as your local food distributor. They're just simply trying to put out fires and feed physical metal around the planet to every place where it's wanted. They have leases where they borrow gold from central banks, and then they have to repay that. And so they got to match up the leases with new leases, all the while trying to flow gold here and flow gold there. And they use the GLD. They can short the GLD to take some delivery out of the GLD and then send it to places around the planet. And it is one massive fire drill that they're running. Remember how, Sean, the LBMA used to publish the GOFO rates, the gold forward rates?
Yeah.
And they published that data for decades. And you could go back, you could see 25 years of it on their website. And back in 2014, it started to go negative. And a negative GOFO rate meant that supplies were tight. And when it first started to happen, I remember writing how, wow, this has only happened on 7 days of the last 24 years, so like a fraction of 1% of the time. Then all of a sudden it was happening about half the time. There was a period where like 4 months in a row, the GOFO rates were negative. Again, showing the extreme physical tightness in London. And so what did the LBMA do? They stopped publishing the GOFO rates. They said, wait a second.
Of course they did.
Yeah. So, it's a fire drill every day. These bullion banks are trying to manage it. And I guess really what you ultimately hope for is that they just decide to get out of the business. That they just say, this just isn't worth it. They're being investigated. They're now being sued. These class action lawsuits, particularly in silver, are extraordinarily important, that they're going now to the discovery phase for the first time. And I think a lot of banks, you mentioned that, the 6 or 7 now that participate in the silver fix, I think a lot of them are just saying, screw this. I mean, this just isn't worth it. I mean, JP Morgan can keep playing the game in paper silver for the reasons I provided. And there's good money in it. If you're running a 30,000 contract short position and silver drops $1, what is that, 150 million bucks? I mean, it's a lot of money, right? And so there's a lot of money to be made managing a market that you totally control. But a lot of the smaller players are just saying, screw it, it's just not worth it. And I think that is a very important development in eventually eliminating the power that London and New York have over the physical price.
All right, so I know you can't say for sure, none of us can, but just speculate with me and let's talk about the end game. Because, you know, what you've described and I've described, I mentioned UBS and Deutsche Bank, you mentioned JP Morgan. JP Morgan is what, Clyde Barrow at this point, and UBS can be John Dillinger, and then we have Jesse James over there as UBS. I mean, they're bank robbers, and
Yes.
they're stealing the wealth of the people, the people that they're supposed to be protecting. They're in many cases stealing from their own clients,
Yes.
and from each other. So at what point do these bank robbers turn the guns on themselves in an old-fashioned Mexican standoff, right, and take each other down? Because this cannot go on forever. And in fact, you summarize that quite well at the end of your paragraph when you write, I hope this helps you understand the forces that are aligned against you as a silver investor. However, don't despair. No fraud can last indefinitely, and no institution built upon a foundation of lies and deceit can stand the test of time. Instead, the day is coming where true physical price discovery will again prevail in the precious metals. What will that price be? I have no idea, but I'm quite certain that it won't be $1,250 an ounce for gold and $18.25 for silver. Therefore, and as always, prepare accordingly. I love that, man, because we do need to prepare accordingly, because those of us that are awake to this absolute epic systemic fraud are fed up, and we are preparing because this house of cards is going to come down sooner or later. The question is when, and what is the end game?
Well, first and foremost, your physical holdings of gold and silver are your vessel for transitioning you through the financial storm. Okay, yeah, it'd be nice to have it go up and, hey, look, I made a few bucks. But primarily, they are your insurance policy. Again, that's probably the best metaphor I can use. They're your ship, to guide you through the storm and keep your financial well-being, your net worth afloat as the system eventually morphs and changes into whatever is coming next. When will these paper derivative schemes fail? It's essentially a function of confidence. As long as confidence remains, the scheme continues. As long as Bernie Madoff's customers were confident that they were going to keep getting money, it continued for 15 years. But once the confidence failed because a couple different people, it grew so large that he couldn't keep feeding, get enough new people in to keep feeding the old people.
Right.
The whole thing finally collapsed. And that's what the paper derivative pricing scheme is. It's a confidence scheme. In the old adage, remember a con man was called a con man because they gained your confidence and then used it against you. Well, this is a confidence scheme, a con scheme. The players within the system don't realize how they're getting screwed by the system. They want gold exposure. And so the system has made it easy to say, oh, I've got gold exposure. I've got an unallocated account. I've got shares of the GLD. I've got a futures contract. I've got whatever. But you don't own actual gold. And we don't even have any idea how many beneficial owners there are for each available ounce in either gold or silver. When the scheme fails and you're looking for a port in the storm, there's not going to be any to be had, at least at a price level that most can afford. That's why you have to prepare accordingly now while you still can get your hands on the metal. But what will eventually break the scheme is a break of confidence. It's like a game of musical chairs. Think of a game of musical chairs where there's, let's just call it only 50 people circling the one chair. It's 50 people that have claim on 1 ounce. As long as the music's playing, everybody keeps walking around feeling good. They can have, sit down whenever they want. But when the music stops and everybody scrambles for that chair at once, that's when the all hell breaks loose. And it's the same thing with physical gold and silver. You might be happy having your gold exposure through any of these types of synthetic gold, paper silver. But when the music stops and everybody shows up at once and a couple of people show up to collect out of their unallocated account at UBS. And UBS says, well, sure, you can have your gold, but you got to sign this form and we'll get it to you in 90 days. What? It's like getting back to that just-in-time delivery system. You don't feel like you have to go to the grocery store today because, well, I can always go tomorrow and there'll be milk and bread and eggs tomorrow. But when everybody shows up at once because the hurricane is coming, oh, crap, it's all gone. And that would be the same thing with gold and silver. So ultimately, physical demand will break the confidence scheme. And there are some significant macro trends in the global economy that are leading to increased not only awareness of the issues you and I have been discussing, but increased demand for the metal. I don't know what point it will finally take to break the confidence game, but it is the breaking of that confidence game that will finally cause a realization that these prices are incorrect economically, and then price will reset, to a point where the supply of the physical metal intersects with the demand for the physical metal, and again, that price is going to be a lot higher than where it is now.
Yeah, I agree with you, and a couple thoughts come to mind when you mentioned the just-in-time food delivery system. We know, like, within 2 days, all of the food and all of the grocery stores could be gone across the country if the right economic storm hit and everybody panicked. It makes me wonder if what we've just been describing in this interview going on at these banks, at the bullion banks, is a run on the bank, but they're just papering over it. Because if you take a look at the debt of the United States, we're now at 20 trillion. I think when Obama took office, it was what, 8 or 10 trillion, maybe 12 trillion, and so they say the economy's fine, but they just paper over it. They paper over it with more debt, more debt, more debt, more debt, and so people are waking up to the fact that this is all a paper charade. And I guess it makes me just wonder if what's really going on at the LBMA, at the Comex, is this 2-day run, and all they can do is paper over it, because. I guess at the end of the day, the good news is you and I and the listeners, we're not alone here, because Moscow and Beijing are joining forces to bypass the U.S. dollar and global markets as they shift to a gold trade. Okay, so there are nation states moving away from this. But as I mentioned, these bank robbers, they're not bankers, they're bank robbers, UBS, Deutsche Bank, JP Morgan. Well, HSBC is also one of those criminal banks. So China's not, freshly scrubbed and, perfectly honest. We can't look to China to save us, but at the same time, China and Russia are joining forces to bypass the dollar, and they're shifting to a gold trade. What does that mean for this whole thing?
Oh, absolutely. It's just all part of that physical demand. Every ounce that anybody takes out of the system basically forces the banks to relever, right? Because the leverage is all based upon whatever physical metal they have left, whether it's 100 times or 200 times or however far they're willing to grow it. And you mentioned the increase of paper, trying to paper it over. There's a great chart. I try to plug into that post you keep mentioning a bunch of just kind of basic supply demand graphs that anybody, if you ever took Econ 101 in college, you'll remember, drawing aggregate demand and aggregate supply and all that kind of stuff. Well, how does increased demand lead to lower price? Well, you just got to increase the supply faster. And in paper derivative Comex silver, it's exactly what's happened. I mean, the demand has increased, but the supply, again, versus where we were in 2011, is up more than 50%. So if you can increase the supply faster than you can increase demand, you can keep prices down. And that's exactly what's happened. When we get to the point, though, again, it's a fractional reserve system. Let's put it that way.
Right.
Just like how every traditional bank wants to avoid a bank run. Every time there's a hiccup in Greece or Cyprus or any place, and they worry about bank runs. Why? Because the bank only is required to keep 10% of your cash on deposit. They loan out the other 90%. That's how money's created in the first place. So if everybody shows up at once wanting cash, the bank doesn't have it. It's like George Bailey, on his wedding day, and It's a Wonderful Life, when all of a sudden there's bank runs all over town, and the little old lady shows up and wants her $28.62. He doesn't have it. Okay, it's in Bob's house. It's in Lou's house. The whole scheme
One of
that he
my
goes
favorite movies, by the way.
Yeah, well, that's a perfect explanation for the confidence game that we've been discussing, because this is fractional reserve bullion banking. What they can't have is everybody show up at once, that music stop. But again, there are trends in the global economy that are not going to turn around. Negative interest rates. We've had this bounce in interest rates, not only in the U.S., but in Japan and in Germany, but they're all headed back down. Negative interest rates and the pending destruction of the euro is the greatest physical fundamental for gold that anybody's ever seen. Because if you're just a regular European, why in the hell would you keep your savings, one, in a currency that may be dissolving, and pay the bank for the pleasure of holding your cash? Why wouldn't you instead own physical gold and stick it in your safe? And so it's demand points like that that will eventually break the con game. We all want it to happen tomorrow, but at the same time, there's, millions and millions and millions of people that aren't prepared for this to end. And so in a sense, they're being given a gift of time to still prepare for all of this. It's a mathematical certainty. It's all eventually coming.
Yeah, well, and you mentioned It's a Wonderful Life, and that evil banker, Mr. Potter, was really a caricature of evil bankers back then, but it's 100% true now. I mean, now that we know about the history of the Rockefellers and the Rothschilds and the manipulation of these markets, and really the evil goings-on at these international banks that collude amongst themselves against we the people, it's just a real eye-opener.
Do you know how long it takes a working man to save $5,000? Just remember this, Mr. Potter, that this rabble you're talking about, they do most of the working and paying and living and dying in this community. Well, is it too much to have them work and pay and live and die in a couple of decent rooms and a bath?
Sentimental hogwash.
And again, it kind of gets us back to where we started. It's the reason to kill YouTube. It's the reason to kill alt media. It's the reason to kill these truth narratives because they don't want people waking up. I mean, just think about it, you guys. Only in a fiat system could they do what they've done to us, to remove us from our real money, gold and silver, as provided by the Constitution. Only in a fiat system could they get away with providing endless amounts of digital metal as opposed to the real metal that is the real wealth. Only in a fiat system. Because you know what's funny, Craig? They couldn't do this with food. They could not give people paper food. People would starve and wake up very quickly. But we've been purposefully dumbed down as to the history and importance of precious metals as it pertains to our own personal sovereignty and our liberty. And that's the biggest trick these Mr. Potters, these evil bankers, have played on us.
Yeah. And Sean, this is something anybody can understand if they just take a few moments to realize how this scheme is rigged against them. I'm not the gold and silver scheme. I'm talking the monetary system. Because as we said, you deposit $1,000 in the bank has to keep $100 on hand. That's a 10% reserve requirement, but then they can loan out that $900 and then send it someplace else. And that person can deposit the $900 and then their bank can only have to keep 10%. And they create from thin air, they loan out $810. And the whole thing is this multiplying effect. And so when the Federal Reserve creates new cash, or when your local bank creates new cash by loaning it out, they are essentially stealing from you who hold dollars. Because you get paid in dollars. You go out and you provide for your family, you pay your rent, you buy some gasoline and all that kind of stuff. Whatever you have left over is your accumulated earnings in dollars. You put them in the bank and the central bank and all of the local banks devalue your accumulated hard work by just simply printing more and more of the dollars. Like anything else in the world, getting back to supply and demand. If you increase the supply of something, you are basically diminishing the value of it. It doesn't matter what it is. And the same thing is true with dollars. That is the inherent evil and unfairness of the system. Oh, and let's throw this on. The bank creates money from thin air and then charges you interest to borrow it.
That's what I was just going to say. It's the perfect scheme to lead us directly into serfdom because not only do they create the loans out of thin air, then they bitch and moan about when there's a default or whatever, and they try to make it sound like, woe is us, so we have all these defaulting loans. They can just, the stuff was created out of thin air. Yeah. They're not actually losing money. They could create $900 in loans for every $100 on deposit. If 4 of those default, they haven't really lost $400. They created it out of thin air, and they still have the original 100 on deposit. Right. It's absolutely the recipe for serfdom. And I'll tell you what, these Rothschild Rockefeller bankers are really brilliant. I say they're satanic in their brilliance because this scheme has ensnared the entire world. They bought up everything of value, as George Carlin told us. It's a big club, and you and I ain't in it. And because we have no one to call, we have no one to run to when they decide to shut down advertising on YouTube just for the truth media, right? It is a strategy to strangle us all. It's a strategy on YouTube. It's a strategy planet-wide, Craig, to turn the whole world into serfs, where you're going to be forced to take a chip. Take the banker's chip if you want to be in their game, because if you're not in their game, they'll just turn off your chip and you'll be out of the economy. And that gets into some pretty heady stuff, but I think that's exactly where we're headed.
That's exactly where we're headed. That's the war on cash as well. And I'll just throw this at you. My favorite president, U.S. president of all time, is not Ronald Reagan. It's not Abraham Lincoln. It's Andrew Jackson. He was the only guy to recognize the evil of central banking and he eliminated the U.S.'s first attempt at it back in whatever year it was, 1840. Here's a quote from Andrew Jackson. He's talking about the bankers, and he said, "You are a den of vipers. I intend to rout you out, and by the eternal God, I will rout you out. If the people only understood the rank injustice of our money and banking system, there would be a revolution by morning." And that's exactly what you're talking about, Sean. That's why they're coming after you. That's why they come after anybody else that runs counter to the banking. We'll call it what I call it at my side. I call it the political financial complex. Everybody's got their beak in the proverbial money bag, and they're doing everything they can to keep the system going. If people only took the time to understand how this worked against them, as Andrew Jackson said, there'd be a revolution there by morning, and that's why they're trying to keep people from understanding it.
Yeah, damn straight. Well, the good news is once you wake up, you can't unwake up. Once the genie's out of the bottle, you can't put the genie back in the bottle for those who are awake. And I think in addition to what you just said, not only do people need to learn what's going on and how they've been victimized by these bankers, they need to learn how to stand up, because what we can see going on in India is terribly sad, and I think the people are just going to stand for it. They're just going to take the cash away from the people. India's a litmus test for what they want to do to us, Craig.
Yeah.
I know we got to wrap this up, but that's the scariest part of all, is people eventually are going to have to stand up, because this evil system is going to shove it down your throat along with their complicit evil media. They're just going to sell all of this to the people, probably under the guise of complete and total fabrications, propaganda, and lies. And the sheeple people, if they don't wake up and wake up damn fast, are just going to fall for it.
Yep. No, that's right. And unfortunately, all of their ignorance is going to only serve to enslave you and I and everybody else listening, because there's a lot more of them than there are of you and I at this point.
Yeah. Yeah, well, and I'll leave people with this. The good news about being awake is you can take steps to buy some precious metals, because as you said, these banks don't even have enough paper dollars to meet demand in a run on the bank. Walk into your local Wells Fargo. Walk into your local credit union. Walk into any bank wherever you bank in your neighborhood, and ask them if they have any precious metals in the safe that you can trade your fiat for. Of course they don't. Target doesn't have any either. Walmart doesn't have any either. There's a very finite amount of physical precious metals on this planet available for purchase right now, and listeners of this program have the opportunity to go get it, because you know your friends, neighbors, and colleagues aren't interested. So think about that next time you're in your bank. They used to have precious metals payable to the bearer on demand in banks across the United States. Not only do they not have that precious metal in those banks now, they don't even have enough dollars to meet demand. It's really insane. Craig, I can't thank you enough for your time.
Sean, thank you. And I would just add, for anybody looking to stack silver, knowing what we know, what you and I went through about the record amount of paper silver that's been created on the Comex market, all the times in the past has invariably led to a price smash, as JP Morgan just waits out the speculators, drives the price back down so they can buy their shorts back. So people need to be wary. If you want to add some silver, you may have an opportunity in the days ahead to buy it less expensive than it is right now. Or the whole system, they'll just keep feeding paper silver into the market to keep price in check. But people just need to be aware that at least in the very short term, there may be some risk to price just because it's such a manipulated market and JP Morgan remains in control.
Yeah, and I'll just leave folks with this. If you want to use the coupon code SGT Report, stop over and visit my friends at SD Bullion. Enter SGT Report into the coupon code, and you can get a 10-ounce bar of silver at spot price. And those guys have been good guys. They help support SGTReport.com. And check out TFS Metals Report and subscribe. Craig, you said it's only $12 a month, and they can get your exclusive podcasts?
Yeah, podcasts and metals reports every day. And I think folks use it. Some folks try to trade, but I think most folks use it for timing their physical purchases. If we can save you 50 cents on 20 ounces, it saves you $10 right there.
Yeah.
So it pays for the subscription, and that's what we do. The rest of the site's free, and it's a great community of people, kind of like your followers, Sean, and people that are awake and paying attention and realizing we're all in it together. And the value of the site is actually more in the community and what they add than what I add. But to keep the lights on and to keep the thing going, if you want some more detailed information on a daily basis, it's a whopping $12 a month. I encourage everybody to check it out.
All right, guys, and that's tfmetalsreport.com. Our guest has been the one and only Turd Ferguson, a.k.a. real name Craig Henke, a great guy and a friend of SGT Report. I hope you're willing to come on again sooner than 2 more years.
Anytime you want, Sean, you just give me a shout. I'll be there.
All right. Thanks, Craig. I really appreciate your time. And guys, thanks so much for listening. You know how much we love you. Thanks so much for tuning in to sgtreport.com for real news 24/7. Check us out on YouTube at SGT Report, and you can follow us on Twitter, also SGT Report. And finally, check us out at thephaser.com and thelibertymill.com. Lots of avenues for truth, guys. Check us out, and we really do appreciate your support. Have a wonderful weekend ahead. God bless.
This is a guy who's the largest individual investor in mainland China, Li Ka-shing, who's the individual I'm referring to. His right-hand man basically said to me, said, Amir, Mr. Li's not just looking for investing in gold mines. He literally wants to find more ways to take physical gold back to Hong Kong and have that exposure.